We buy or sell Kroger. First off, read this disclaimer carefully. So, we can also do our good deed of the day by liking and subscribing. The thing is that I have put Kroger in a theme I call employer of many because Kroger have a lot of employees. They are in the supermarkets business, 11% from the 52-week low, minus 31-ish% away from the highs. Here is their website introducing Boost membership. Membership as low as $59 a year. Enjoy free grocery delivery with an asterisk, 2x fuel points, and $100 in savings with two asterisks. Your membership pays for itself. I mean, asterisks are always ridiculous. And I don't know where I can get more data here on the asterisk, so yeah. Okay, here is their website. Nice e-commerce store. Shop Frightful Faves. Get all you need for Halloween. Available for free 2 asterisks pickup in as little as 3 hours. Yeah, here is the website. Yeah, let's go to the chart like that. We start with the weekly data point, which give us the very, very big picture for Kroger. So, you can see here back in 2012, buying the blue 100-week moving average was very, very, very good, a major rally. And the blue 100-week was also very buyable here, a temporary buy, a temporary but gain is a gain. Surgical short seller level back here as we approached 2017. And so basically, my point is that this moving average is a big deal, and it was recently a big deal back here in 2020 and here, and we are ferociously testing that blue 100-week moving average now as well. It's a huge deal. We have tested it for 3 weeks now. So it's one of those situations where, yes, we are at a very important support level that has worked in the past, but we are not yet seeing that follow through here from the bulls. Previous week, you can see the upper wick of this candlestick went all the way up to the purple 20-week moving average. So the bulls were sort of ambitious initially, but then they gave it back. So this is one of those situations where, yes, we are at very important support, but the bulls need backup in a significant way. So I'm going to be bullish based on the technicals, but it's with the caveat that we are not really seeing a follow through. If you are at support, you are supposed to bounce from support, not like fall asleep at the support level, because then the bears will take notice and they will start building short positions. Looking at these daily data points, we are at a horizontalish level, but not clean. We are below all kinds of moving averages. So yeah, on the daily data points, it looks nasty. On the weeklies here, MACD extremely low level. Previous time we had this level was back in 2019. Let's look what happened. Here is 2019, similar level. It formed a very key low, and it was a very good time to actually buy Kroger. RSI and PPO are at very low levels, but not at levels that are like very high probability of resulting in a rally. On the daily data points, we see something similar. We have some interesting signals in terms of RSI and PPO, but there have been quite a few times where we went lower. If we were cleanly at 100 weekly moving average support, I might have given Kroger an 8 here, but I will give Kroger a 4 because there's been quite a few weeks now of us not really getting able to build up momentum on that support level, suggesting that the sellers are numerous. Let's look at the seasonality. It inspires some confidence because over the last 5 years in green, 7 years in blue, and 10 years in red, there is usually strength into the end of the year. Good news. To the left, over the last 5 years, October is atrocious, but look at November, closes higher 100% of the time with an average 5% gain. December is bullish. Jan, February, March, April are also bullish over the last 10 years. October, November, December, these are strong months. The last 20 years. The coming month November is the third strongest month. That's bullish. I will give the bulls a 5 here on the seasonality. We got some decently bullish data, but I would wish it was a bit more cleanly bullish. Let's look at the fundamentals. A number 2 buy from Sachs, A value, B growth, and the B momentum. Those are very, very good style scores. Industry rank, bottom 8%, supermarkets, not the best industry rank in the world. The dividend is 2.47%, so there is yield here, not like, something that you can retire on necessarily, but there's yield. Market cap is 30 billion US dollars. The beta is almost half of that of the market, which is also something that value investors especially want to see. Looking at insiders activity, not good. Sell, 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 sell. This is not what insiders are supposed to do. So they are not helping out the stock form any kind of low. Let's look at the consensus estimates here. And there are 21 analysts covering this stock. The average price target is 22% above us. Highest is 72% above us. The lowest is 1% below us. So the biggest pessimist does not really see that much downside. Given that the insiders are selling, we end up with a 6 here on the fundamentals. The fundamentals are good, it's just that I really don't like to see the insiders selling. Let's look at some relative performance data. Long term, there is a 69% positive correlation with the S&P 500, 55% with the consumer discretionary ETF XLI, 84% positive with the consumer staples XLP, 47% with XRT, which is the retail CTF. On the shorter time frame, daily data points, 82% S&P 500, 72% consumer discretionary, 75% with XLP, 85% with XRT. The strongest correlation we got to long and short term was with XLP, which is the consumer staple CTF. So here is the chart. So what happens with the XLP is going to have a bit of an effect on Kroger. We have seen 2 weeks of rally now, which has pushed us into a territory where rejection levels are in play. So that's just the current setup. Looking at the daily data points. Yeah, we are seeing some very tall candlesticks here. Long, candles, well, tall, yeah, which suggest and show us that there is conflict among the investors. There is buying and selling in a more significant ways during the day. And that is definitively, a function of, support below us, but also these resistance levels above us. Looking at PPO and RSI, we are emerging from an interesting level, especially here on the MACD. We are extremely low, though, on MACD long term. So we are sort of due a more protracted rally. Looking at the daily data points, here we are emerging from an interesting level. Here is Kroger against the consumer staples ETF. Kroger has outperformed it since mid-ish 2019. Um, there's a lot of up and down, as you can see. It's a bit erratic, but there might be some longer term time cycles. So let's investigate these. Yeah, it seems. I mean, this is not super clean time cycles, but clean. There isn't there. They are more clean than dirty, to put it that way. So there is something interesting there. Let's look a bit at the seasonality for these two, like that. So the seasonality is bullish for Kroger into late January of next year. That is definitively bullish. So it means that being in Kroger is usually better from a seasonality perspective than being in the consumer staples ETF. Some mixed signals on relative performance, but I do give Kroger bulls a 3 here. We end up with 4.5 in favor of the bulls. 100 weekly moving average support is the key entry signal and also the stop loss. We have some time left. Let's look at some of the stocks in the consumer staples ETF. PG is on the top of the list. That is Procter and Gamble. We are below the red 200 week moving average here on the dailies. Yeah, just messy. Nothing like interesting really there. Let's look at PepsiCo. Yeah, I mean, PepsiCo is doing pretty well, but if you don't have a position, it's sort of like, yeah, what do you do? Because we have seen some strong weeks now. So bulls are in control. Looks interesting, but it's not as interesting if you do not have a position already. It might be interesting from a bearish perspective if we do see that these. If you look at the high end of the wicks, we are failing at an old fail level you see back here as well. It's the same level, and that benefited the bears. So maybe there's actually a bearish opportunity here if that is like the confirmed ceiling. Next on the list is Coca-Cola Company. Mm, we didn't go all the way down to the red 200 week moving average. That could frankly be the case that people started to buy the 200 week because we were approaching it, and sort of like the low came before the low. We're supposed to come, which is bullish. Yeah, we are still below this purple 20-day moving average. You can see that the bears, they are holding back the bulls here, but on Friday the bulls closed above it. So some interesting price action here from Coca-Cola. Let's look at Walmart. Um, yeah, pretty clear short seller level here. This green 50-week moving average. There's not like tons of interaction between price and that moving average, but there is a significant amount. But on the dailies, it becomes a bit more complicated because then you have the red 200-day moving average, clear resistance rejection level. But as you can see, on Friday, we did quite clearly like peekaboo above it. That's interesting. That's something that it's not something the bears want to see. Here is Costco Wholesale. Interesting price action here as well. The blue 100 week moving average is working out pretty well. It's worked out before as well. Interesting. So there's multiple of these stocks within the XLP that are forming lows, situations where you also see the bulls show strength, exhibiting behavior that short sellers do not want to see. They don't want strong breakouts above resistance levels. That is not something you at all want as a short seller. It will also trigger quite a few stops. So definitively, we looked at Kroger. Interesting bullish opportunity there. The XLP, interesting things happening with the XLP as well. I mean, the consumer staples is like conservative, safe refuge ETF as well. Even in a bear market, though, it will go down, but it will see more inflow of money than other higher quote unquote risk ETFs, sector ETFs. So yes, the situation in the market is interesting, for sure. I do think that it's a good idea to always be involved in the market. When you start to come up with reasons why you shouldn't, then you create a situation where you do not learn to navigate all market conditions. And you can always trade in a demo account, which is the best place to learn. So, and in a demo account, there is no risk.